The Fed says they're concerned about a slowdown in the worldwide economy, and stock markets are on edge as tech and oil prices continue to fall. Jeremy Bryan is the portfolio manager at Gradient Investments, and he joins us now. Jeremy, good morning.
Good morning.
Do you think the Fed is concerned enough about the economy slowing to back off hiking interest rates?
At this point, I don't think so. If you listen to Chairman Powell's comments, really what he was saying is we're having slowing global growth. He says the U.S. is still reporting really strong numbers. Consumers are still really strong. I think the U.S. is still on the same track it was before, but he's starting to see some warning signs about potentially changing course in 2019. But I think December is still on as predicted.
Is it possible for the U.S. economy to continue to grow while the rest of the world slows down?
Yeah, that's going to be the real issue. I think we're definitely going to see some slowing. I mean, the other component that we have is we're not going to have benefit of tax in 2019 as well. So there's that component, and then there's the slowing global growth. We'll wait and see. I mean, really, right now, we're a consumption economy at the end of the day, right? We spend money.
Right.
And so if we're spending money and our consumers feel happy, they still have jobs, they're rising wages, we can still grow here. It's just a question of how much.
Merry Christmas, right? A lot of people are doing the holiday shopping
Absolutely.
thing. We'll talk about that later in the show, but I also want to talk right now about this volatility. I thought it would go away. Many people thought it would go away after October, and certainly after the midterm elections, but it has not. Why are we still seeing these wild swings?
Yeah, I think because we're seeing what exactly what we talked about before is that we don't really know the trajectory of 2019 as of yet. We're starting to see some warning signs internationally, but people are trying to assess what 2019's growth rate looks like. And is that going to slow? I think it's pretty much a consensus that we are going to slow. It's a question of how much now. And I think we're just going to be choppy here until we start to hear the companies start to talk and things like that.
Let's go international, because we did have a Brexit plan in place to get Great Britain out of the European Union. And overnight, we saw the Brexit executive resign. And then Nigel Farage, who was originally let's get the UK out of the EU, he tweeted this: "Well done, Dominic Raab, the executive who resigned. A few more, and we will be rid of this duplicitous prime minister." A, can Theresa May, the prime minister, survive this? And B, what sort of uncertainty does this inject into global markets today?
Yeah, great question. And I wish I had the crystal ball for it, but it's something we're going to continue to monitor from that perspective. I think she can survive it, but we'll see. One of the things we've been talking about is that we still like international stocks overall, but this uncertainty and the economic slowing and things like that has created that valuation differential. I mean, stocks in international markets are just cheaper, but there's a reason why they're cheaper right now. So we're still advocating for positions. We think people should dip a toe in if they don't have anything in now. But over time, we understand that there are some differences, and we're going to have to monitor what's happening in the markets there.
Oh, the British pound is getting hammered today as the FTSE hangs on to a very small gain, probably because of the weaker currency. Jeremy, thank you very much.
Thank you.